A major real estate market indicator is on the move. You want to know which one and you want to know what's going to happen, stick around. We're going to talk about that next. Hey friends, Ryan Reynolds here with Keller Williams Consultants Realty and your September 2025 real estate market update. So what's going on here in September of 2025? Well, there's quite a few things going on, but we're going to always talk through them through the perspective and the lens of the three biggest statistics that make the difference in the real estate market. Those being the inventory levels, the mortgage interest rates, and of course the sales prices, both average and median prices we're going to talk about. So the first statistic we're talking about is inventory, and as of today, there are 4,448 homes on the market. That represents a 20% increase over last year. So what we've seen in the last couple months is that the inventory has been growing. July and August were fairly slow in terms of the number of homes going off the market compared to the number of homes coming on the market, and that's why the inventory is growing. It's up 20% compared to last year because this year in general we're down in the number of sales, and that is kind of a fact. The couple of statistics that might be interesting to throw in here is that the in contracts are up 5.4% right now compared to what they were a year ago. And that might mean that the inventory is going to start shrinking up, although I have seen a lot of new houses coming on the market in the past few days. And the days on market is still sitting at 27 days, which is only 6 days slower than it was last year, which means that naturally the market should get a little bit more inventory because of that, but it's still not lasting very long. We're still under 30 days to sell a house. So inventory, that's where it is, and we'll go into the next statistic, which is mortgage interest rates. So with mortgage interest rates, this is where the big story is this month. Mortgage rates as of today are sitting at 6.29%, and that is 0.3% down from where it was last month when we talked. And it is also down almost 3/4 of a point since the peak this year, which was up around 7.1 or 7.15%, something like that. Now, the majority of the reduction in interest rate that's happened in the last month happened in one day. So from September 4th to September 5th, when the jobs number came out that was not as good as the market was expecting, that affected the bonds market, which then increased the likelihood that the Federal Reserve is going to lower interest rates coming through here in September. And so that's why it dropped down that 0.3%. This is really good news for home buyers. And it's actually really good news for home sellers. If you're selling a home, it means there's going to be more buyers in the market looking to buy. If you're a home buyer, it means that there's going to be a lower price you're going to have to pay per month to buy the same dollar amount of house. And so interest rates is really one of the biggest indicators of the health of the real estate market, or maybe the factors that affect how it's going to go. And with the past 3 years having been slower than normal, this could be very well the start of a new market where we're going to see a lot more transactions happening. That's not guaranteed yet, but as we talked last month, there's a couple other things that are happening. The 10-year Treasury note to 30-year fixed mortgage spread has been shrinking up. We're expecting that to continue, and the Federal Reserve is likely to stop selling mortgage-backed securities here in February, which will greatly impact the mortgage interest rates. And so in the springtime, I'm expecting mortgage interest rates to drop even further. Now, what will that do? Well, when that happens, the market's going to probably be really, really busy this spring. There'll probably be more multiple offers and things like that. If you're trying to buy a house, that's really bad news. And what you should probably be doing is buying now versus buying in the spring, if you can afford to do that. And then if the rates do drop like that, you can always refinance. If you're planning on selling and selling only and you're never going to buy a house again, probably wait till spring. But if you're trying to sell and then buy, this is the best time of year to do that because there is a little bit less activity in the market, and you'll probably have a lot better luck and a lot better situations when you're trying to move from one house to the next without moving twice. This news. And the last thing we're going to talk about is where are we with pricing? How much is your house worth now versus was worth last year? And the answer to that question is the average sale price in the Greater Columbus MLS is $494,000. That's the average, which is up 5.3% compared to last year. But when we look at the median, we're actually at $360,000, which is actually up 3.4% compared to last year. So how do we reconcile those? It means I think the market right now is about average from a historical perspective, but compared to the rest of the country, we're doing great. Most places are actually going down in value. We're still going up. So that tells you that this area, Greater Columbus, is a great place to invest since we're really beating the pants off of pretty much everything else in the country. Well, that's all for this month. Again, my name is Ryan Reynolds with Keller Williams Consultants Realty. And if you have a specific question about your situation, feel free to reach out and we'll set up a time to do a consultation and come up with a strategy that's right for you. As always, with the Ryan Reynolds team here at Keller Williams Consultants Realty, guiding you to the home that fits your life.